Strong gains on Wall Street on Friday, but key indices closed February in the red. Asian markets trade largely higher, while the gift Nifty is also suggesting a positive start for our own markets. In a surreal turn of events, the diplomatic meet between US President Donald Trump and his Ukrainian counterpart Zelensky turns into a shouting match as Donald Trump and Vice President J.D. Vance berate Zelensky, who is asked to come back when he's ready for peace. The mineral deal between the two countries stands cancelled, even as European leaders rally behind Ukraine. Crude prices fall to around $73 a barrel. Gold prices also correct as the dollar index consolidates around its highest level in 2 weeks. India's GDP grows 6.2% in the third quarter. The government pegs growth for the whole fiscal at 6.5%. CEA Ananth Nageswaran says that 7.6% growth needed in the fourth quarter to reach the FY25 target. Adds that incremental factors will help India navigate growth in the face of uncertainty. Automakers see mixed sales in the month of February. M&M, TVS Motors and Eicher Motors sales beat expectations, while Maruti and Tata Motors' sales disappoint. Good morning. You're watching Power Breakfast here on CNBC TV 18 at the start of this all-important week in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are doing this morning. And it's a positive start for most of the indices that are trading today. The Taiwanese index, though, is a bit of an underperformer, down around about 1.75%. The Hang Seng continuing its outperformance from where it left off. The Shanghai Composite 2 trading with gains of around 0.5%. The Nikkei is trading with gains of 1%. The South Korean markets are shut today on account of Independence Day, but most of the Asian markets, barring Taiwan, are trading largely in the positive in today's trading session, and that is having a bit of a rub-off on the gift Nifty as well, and the implied open currently suggesting a 90-point gap up for our own markets, and it remains to be seen after this 8-day losing streak that the Nifty has had. Will we see some bounce from lower levels? And more importantly, if we do see a bounce, will that sustain? But for now, the implied open suggesting a 90-point uptick for our own markets. And all of this green is courtesy what happened on Wall Street on Friday. The Dow Jones gained 600 points, recovering most of the losses that it had made on Friday. The S&P 500 also gained almost 1.5%. The tech-heavy Nasdaq gaining 300 points at close. But most of these gains were due to index rebalancing and other technical factors as well. So keep that in your mind. For the week, the Dow Jones ended nearly 1% higher, while the S&P 500 declined almost 1%. The Nasdaq ended 3.5% lower. CNBC's Kate Rooney gets us a wrap of all the action on Wall Street.
U.S. markets closed higher Friday, with the S&P surging 1% despite a brief pullback after President Trump and Ukrainian President Volodymyr Zelenskiy clashed in the Oval Office. The Dow higher 601 points, S&P 500 surging 93 points, and the tech-heavy Nasdaq up 303 points. Inflation eased slightly in January amid increasing worries over President Trump's tariff policy. The Core Personal Consumption Expenditures Price Index, or PCE as it's also known, excludes food and energy. That hit 2.6% annually. The Federal Reserve tends to prefer this measure because it does adjust for changes in consumer behavior and puts less emphasis on housing costs. The report comes as the Federal Reserve considers its next move regarding interest rates next month. And after a 21-year run, Skype is logging off. Microsoft announced today it's retiring the video conferencing service in May. The tech giant said it's going to begin allowing Skype users to sign into Teams with their Skype credentials, and their contacts and chats will transfer over. Users also have an option to export their account data. Skype failed to grow over the last decade under Microsoft's ownership, and in recent years, the company started pushing its Teams app, which generates revenue when it's bundled with other Office apps like Outlook or Word. But even at its last count, Skype had more than 30 million daily users. That's what's happening here in the U.S. Back to you in Mumbai.
Staying with Wall Street, let us also listen to market experts and economists giving their views on the Fed's stance with respect to Donald Trump's tariffs and their outlook for the U.S. economy.
The Fed has signaled pretty clearly that the data isn't clear to them right now. They had hoped for faster disinflation, and that didn't come about. It looks like the numbers are stalling out. And at the same time, they're now being introduced to the idea of uncertainty related to other policy levers. So trying to understand where tariffs might go, trying to understand how the workforce might be affected, whether it's immigration or other changes going on in the economy. So it's a tough time for them to try to give any signals, and I think they're right not to.
Well, hopefully we'll have a lot more clarity on where kind of tariff and international policy is going to be. And we'll have a lot more data to see, is the inflation rate still gradually, although very gradually, coming down? Is the economy still holding up? So I think in another 3 months or so, things will be a little bit clearer.
The economy is starting to gag on all the uncertainty that's coming out of policy being made in Washington, D.C., everything from the tariffs to the haphazard cuts to government employment. And we've got the potential for a government shutdown in a couple of weeks. And then, of course, there's the Treasury debt limit. I mean, there's just so much uncertainty. And, of course, that's got the Fed on hold. The Fed's told us point blank they're not going to do anything until they get some clarity around economic policy. And I think businesses and consumers are starting to say the same thing, with all this uncertainty. I may not pull back. I may not cut jobs. I may not cut my spending. But I'm certainly going to be much more cautious in all those things going forward. And it's reflected in the data.
That's all the global market action, but how will all of these overnight cues impact our own markets? Our research team is joining in with how the trade setup looks like and the stocks that are likely to be in the news today. First up, Vinny is joining in to get all the market cues we need to watch out for. Vinny, good morning. It was a week to forget, but what's the setup looking like this morning?
Surely it was a week to forget, more like the month to forget as well. It has not been an exciting month for the markets. Now, when you're looking at it just for the week gone by, Nifty fell on Friday itself. When you look at it, it's fallen almost 400 points. It closed below the 22,200 levels on Friday. Nifty levels that now everyone is watching out for is at 21,800 level. Will it, manage to hold on to those levels? Will it see a fall? What are we watching out for is going to be key. Now, for Friday, we saw top losers coming in from some of these IT names. So Techem, Wipro saw a fall. Other than that, IndusInd Bank also was among the top losers for the Nifty 50. And mid and small cap, that saw a sharper sell-off coming in on Friday. Nifty mid cap down 2.5%, small cap down almost 3%. So that was seeing some bit of an intensified sell-off coming in on the broader markets. Nifty Bank on Friday itself outperformed the Nifty 50, but that also closed in the red. They're keeping an eye out on the level over there. Is 48,000 is one should watch out for the Nifty Bank. Now, FIs and DIIs, when you look at it, FIs continue to sell even on Friday. 11,639 crores is what was the selling coming in. DII buying was more than the FI selling. So DIIs bought around 12,309 crore rupees. And, this is despite those rejigs that we saw in coming in for MSCI, the flows on that front, FIIs continue to sell. What are we watching out for today in terms of a reaction for the Indian market? So the GDP data that came out on Friday came in line with expectations. So yes, that's what we were watching out for, around 6.2%. That was the Indian GDP data that came in. Auto sales numbers, we'll see some reactions coming in on that front for the month of February for auto companies. Trump tariff data's update on that front across the globe. Everyone is waiting for more clarity on that one, as well as Trump, as well as Zelensky, the clash that happened over the weekend. Keep an eye out on any updates coming in on there.
That is the key event to watch out for. Vinny, thanks a lot for that. Over to Vamakshi now. List out the stocks you need to keep an eye out for today. Vamakshi, good morning. What's on the list?
Well, good morning, Hormas. Let me first start off with the February auto sales data. Escorts Kubota saw its tractor sales go up by almost 11.4%. M&M's total auto sales, on the other hand, was up nearly 14.8%. This is better than what the street was expecting. Maruti Suzuki's total sales saw a marginal uptick of almost 1%. This is slightly below what the street was expecting. Tata Motors, on the other hand, the sales saw a decline of almost 4.6%, came in below the street expectations. SML Isuzu's total sales were up nearly 27.5%. And on account of Eicher Motors, the total Royal Enfield sales was up nearly 19.4%. This is above expectations. For TVS Motors as well, the sales were above expectations, seeing an uptick of almost 10%. AB Real Estate is another counter that we'll be watching out for, and that is because Arm Birla Estates has secured booking value of around 500 crores for a project in Bengaluru. NCC has bagged an order worth almost 219 crores in the month of February. Piramal Enterprises will also be in focus because they have received GST demand order worth 1,502 crores from the Maharashtra Tax Authority. Dalmia Bharat will also be in focus. They are looking to add 6 million tons per annum cement capacity in Maharashtra as well as Karnataka. Indian Overseas Bank has received a GST liability demand of nearly 700 crores. And lastly, keep an eye out on Jeevan Small Finance Bank. They've completed sale of stressed loan portfolio with an outstanding of somewhere around 365 crores for 34 crores to an ARC.
Kamakshi, thanks a lot for that. And lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. 22,800 first, 22,500 next, and now we are down to almost 22,000. What's the setup on the F&O side looking like?
Well, Friday was a session that bulls would like to forget. Actually, make that February was a month that bulls would like to forget. And if you look at the trades on Friday itself, a 400-point decline on the Nifty. The Nifty Bank was a relative outperformer by not falling as much. The mid-cap and the broader cap indices were always, weakened, and it was the IT pack that actually lowered the overall sentiment of the market. It was more global-led than anything else, down about 4% for the IT index itself. That was the top underperformer. Then the data came by in the evening, and that told you that the FIS selling was close to 11,600 crores. Yes, the DIIs went ahead and bought 12,300 crores, but remember, these institutional volumes were also higher due to the MSCI reject, so that is something that we need to keep an eye out on. But like I pointed out, the Nifty Bank was a relative outperformer by not falling as much, and that's exactly what the data indicated as well. The Nifty open interest change on day one of the March series was up 7%, Nifty Bank not so much, and telling you that the FIs shorted more Nifty than Nifty Bank. Their net sell was close to around 2,500 crores in index futures, of which 2,150 crores was directed towards the Nifty itself, whereas the Nifty Bank saw selling of just about 264 crores. The FIs, which were always on the back foot all of last couple of series, continued to remain that in index futures as well. They added about 14,000 shorts over and above their shorts, which were at the start of the series, taking their overall net contracts to closer to 2 lakh once again. Minus 1.88 lakh is where their net exposure stands, with 15% long exposure. Now the question, where do we go from here? With the GIFT Nifty indicating a positive start, you have the Nifty 22,100 put extremely active, and on the way up, the 22,200 call equally active as well. If you combine the premiums of these options, the option writers are expecting a range of 22,000 at the lower level to 22,350 at the upper level for the Nifty. The key to track would be the Nifty put-call ratio is closer to the lower end at 0.78. Typically, the market bottoms out between 0.65 to 0.7 for the put-call ratio. Let's see whether that happens or not. Were the markets to cross that 22,350 mark on the way up, we could see some short covering.
We look forward to that. The bulls will especially look forward to that. Mangalam, thanks a lot for that update. Take a short break. Up next, India's growth was in line with expectations at 6.2% in the third quarter. We get you more details after this break. Stay tuned. Welcome back. Now, India's third quarter GDP data was announced after market hours on Friday, and it came in at 6.2%, which was in line with the CNBC TV 18 poll. The previous year's GDP numbers were also revised higher. Latha is here with more details on that. Latha, good morning.
Well, the numbers of the Q3 GDP clearly seem to indicate that the economy has turned the corner, or bottomed out, if you please. The growth, of course, came in at 6.2 for the third quarter. That was in line with CNBC TV 18 poll. But look at the internals. The sectors that did well: agriculture 5.6%, trade, construction 7%, trade, hotels, transport and communication, a very big employment-heavy sector, informal sector 6.7%, and realty, real estate and finance 7.2%. All these are employment-heavy sectors. We should note that usually means good news for consumption. Private final consumption itself, that is looking at GDP from the expenditure angle, showed a growth of 6.9% for the full year. The forecast is 7.6%, so much better than the 5.6% in FY24. Now, the weak points are that manufacturing didn't do well, 3.5%, and capital formation, gross fixed capital formation, which has been the engine of growth for the past 3 years, has clearly slowed to 5.7%. If you look at the internals of the data, private investment is really low. But if you looked at the output side, the MOSPI is expecting, the Ministry of Statistics is expecting the full year growth, including Q4, to come in at 6.5%. Now, if you do the math, if you subtract the Q1, Q2, Q3, then Q4 has to give a growth of 7.6%, which could be a little tough. But, we can give benefit of doubt because of several things, like the RBI rate cuts, like government capex coming in strong, as the CEA pointed out. Now, the important point is Q2, the FY23 and FY24 have been revised hugely higher. FY23 from earlier 7.2 to 7.6, and FY24, last year that is, bumped up by 1 percentage point from 8.2 to 9.2. Now, this becomes important because last year's third quarter actually is 60,000 crores higher than we thought. In spite of it, the economy has grown at 6.2%, which means it's really a fine clip. So the point is Q4, if it is not 7.6, it can well be over 7%. Now, the question I would like to leave with you is, if it is going to be over 7%, then shouldn't people be buying stocks now? So there is a small hope in the market that the GDP numbers may at least stop the FPI sell-off.
Yes, certainly we're hoping for that. Lata, thanks a lot for that update. Now, the new SEBI chief, Tuhin Kanta Pandey, arrived at the SEBI headquarters in Mumbai on Saturday to assume charge as its new chairperson. Pandey has been appointed as the 11th chairperson of the market regulator for a 3-year period. Pandey succeeds Madhavi Puri Bhuj, who completed her term as the first female chairperson of the regulator last week. We'll take a short break. Up next, we get to cues from the commodities market. Stay tuned. We'll be right back. Welcome back. Now, US President Donald Trump and Ukraine's President Volodymyr Zelenskiy clashed during a meeting at the White House on Friday. Trump and his Vice President J.D. Vance criticized Zelensky for being disrespectful and not showing enough gratitude to the US for its support. Trump rebuked his Ukrainian counterpart, telling him to be more thankful and accusing him of gambling with World War III by not going along with ceasefire plans. The two nations also failed to sign the minerals deal that Zelensky hoped would spur Trump to back Ukraine's effort on the war and potentially win support from the Republicans for a new round of aid. While European allies have reaffirmed their support from Ukraine, some right-wing leaders and Russian officials have praised Trump's tough stance. Moving on then, updates trickle in from the ongoing conflict in West Asia as well. Israeli delegation is looking to extend the first phase of the agreed-upon ceasefire deal for 42 days so that more hostages can be released, while Hamas opposes the extension and insists on moving on to phase 2. Over the past month, both the parties have accused each other of violating the ceasefire, casting a doubt over the move to second phase. Over the weekend, Israel blocked off aid trucks from entering Gaza as a standoff over the truce. Hamas has called on Egyptian and Qatari mediators to intervene on the same. And Manisha Gupta now joins in with all the updates from the commodity space. Good morning, Manisha. What's on your radar today?
Well, so much geopolitics that you spoke about, Hormuz, is definitely on plate because that is impacting many of these commodity prices. I'll start with crude oil, and while the previous month, that is the month of Feb, was the first monthly decline in 3 months, we've started March on a positive note. We even are trading 1% higher in the Asian markets right now. Well, the major factor right now is the strong Chinese data. The PMI numbers have come in at a 3-month highs. February factory activity has expanded to 50.2 versus 49.1 on a month-on-month basis. So that is what the markets are looking at right now. And apart from that, it also has to do with what's happening in sense of tariffs. which take effect on Mexico and Canada on 4th of March, and then additional tariffs on 10% on China. The geopolitical concern, what's happening in Gaza and between Ukraine and Russia, also seems to be weighing on in the sense of crude oil prices. But importantly, there's a report from Bank of America which says that the Brent prices will average 75 in this year and will range between 60 to 80 through 2030. So markets clearly forming a range now for the next 4 or 5 years there. In the other commodities, we also have seen the gold prices, after declining in the previous week, start this week on a positive note. So has been the case with base metal prices, where you have copper, aluminum, all trading in the positive right now.
All right, Manisha, thanks a lot for that update from the commodity space. But with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for today's trade.